Most businesses assume their tools and inventory are covered under property insurance, but in real claims, that assumption is where the pain starts. Today, I'll show you what's typically covered and what usually isn't. Hi, I'm Marty with JMW Insurance Solutions. We help business owners protect what they've built and make sure coverage matches reality before a claim forces the lesson. If you own a business, your equipment and inventory are not just stuff, they're your ability to operate, they're revenue. They're the work you've already paid for. And because they're so central, many owners think, we have commercial property insurance, so we're fine. Sometimes you are, sometimes you're not. The challenge is that property coverage has boundaries, where the property is located, how it's used, what caused the loss, and what the policy considers business personal property versus property in transit, mobile equipment, or specialized tools. So today, let's break this down simply. What's usually covered, what often isn't, and the most common gaps we can fix quickly. What is typically covered under standard property insurance? Most commercial property policies are designed to cover business property at the insured location, meaning at the address listed on the policy. That often includes furniture, fixtures, and office equipment, computers and electronics, up to the policy terms, inventory, stored at the location, supplies and materials used in operations, some types of equipment that stay on site. If your tools and inventory stay in one place and your limit is adequate, you may be in decent shape. But here's where businesses get surprised. The moment property starts moving, or the moment the cause of loss falls into a category that's excluded or limited. What's often not covered, or is only partially covered, here are the most common surprise gaps I see. Tools and equipment that leave the premises, contractors, service businesses, and anyone who works in the field often keeps tools in trucks, trailers, job sites, or temporary locations. Standard property coverage may be limited once your equipment is off the scheduled premises, or it may have lower sublimits for property away from the main location. Real-world claim scenario. A contractor's trailer is stolen overnight with thousands of dollars in tools. The business assumes property insurance covers it. The claim is paid only partially because the policy had a sublimit for off-premises property, or didn't include the right coverage for mobile tools. Property in transit. If you move inventory between locations, deliver materials, or transport equipment, property in transit may not be fully protected under a basic property form. Example, a business transports inventory to an event. A theft occurs. Coverage depends on whether the policy includes transit coverage and how it's written. Theft limitations and security requirements. Many policies cover theft, but the details matter. Was there forced entry? Was the property unattended? Was it in a locked vehicle? Was the vehicle parked in an unsecured area? Are there protective safeguard requirements? Alarms, sprinklers, etc. Some businesses assume theft is theft and the policy will respond, but insurers often look closely at the circumstances. Flood and certain water losses. Flood is typically excluded unless you have separate flood coverage. And some water damage situations can be limited if they're tied to long-term leaks, poor maintenance, or specific exclusions. High-value items and specialized equipment. Some policies have sublimits for certain categories: electronics, outdoor property signs, certain tools, property at temporary locations, employee-owned tools. If your business relies on a few high-value items, you want to confirm limits and whether special coverage is needed. Actual cash value versus replacement cost. Even if something is covered, how it's valued matters. Actual cash value includes depreciation, which can reduce claim payments significantly. Replacement cost coverage is often preferred for equipment and inventory, but it must be written correctly and supported by accurate limits. The 5 questions that reveal whether you're protected. Here's a quick self-audit. If you answer yes, you should verify coverage. Do tools or equipment regularly leave your main location? Do you store inventory in more than one place or at a temporary location? Do you transport goods, inventory, or equipment as part of operations? Would a theft or water loss create immediate downtime? Do you have any high-value tools or equipment that would be hard to replace? The simple fix: match coverage to how you operate. Good coverage is not about buying everything. It's about matching reality. Here are the most common adjustments that solve the biggest problems. Solution number 1, confirm off-premises and transit coverage. If your property moves, your coverage should follow it within reasonable terms and limits. Solution number 2, make sure limits reflect what you actually have. A lot of businesses are underinsured because limits were set years ago and never updated. Solution number 3, use the right form for mobile tools and equipment. Some businesses need specialized coverage for tools and equipment used at job sites or transported in vehicles. The goal is to eliminate gray area. Solution number 4, improve documentation and theft prevention. Insurance works best when you can prove ownership and value quickly. A basic claims kit of photos, receipts, and serial numbers is powerful. Solution number 5, align deductibles with cash flow. A deductible that's too high can slow recovery even when coverage exists. The right deductible is one you can pay without hurting operations. Your equipment and inventory are the engine of your business. If one theft, one water loss, or one job site incident can shut you down, you don't just need insurance. You need a recovery plan that holds up in real life. If you want a quick review to confirm your tools and inventory are covered on-site, off-site, and in transit, we'll help you tighten the gaps without wasting money.